Welcome to Into the Mind of a Madman. You are now rocking with me, the Madman. And the conversation I want to have with you today is understanding taxes. Now, I want to have this conversation with you today because I just believe that a lot of people don't understand why they pay so much in taxes. And I'm not any type of tax expert. I am no CPA. I'm no accountant. I don't have any degrees in accounting. I'm just aware of just people's misconceptions about taxes. Now, in order to have this conversation, I have to start off with just a basic understanding of America being a business. I'm not here to have that conversation that certain enlightened people have about taxes, but I do want you to understand America is a business. You as a person, you as an individual are looked at as a business, and you as a person can actually have a business within America. Like, like if you sell shoes or clothes or hair salon or whatever. So understand America is a business. You as a person are a business, and you can have a business within America. You as a person. Now, what this conversation is to focus on is you being a business as a person within America, and you paying income tax. The second understanding you have to understand is, even though they call it income tax, you are not paying income. You're not paying taxes on all the income you make. You as a business to America are paying taxes on the profit you make. You pay taxes on the profit that you make. You are a business. You are paying taxes on the profit. What do I mean by profit? If you don't do your own taxes, here's an understanding. If you do your own taxes, you already know what I'm saying. There are deductions that America gives you. They give you a standard deduction, whether you are singled, whether you file single, whether you file married, whether you file married but filing single, whether you file head of household. These are all deductions. These all of these filings come with a standardized deduction, meaning the government says there's a certain amount of money for expenses I am granting you that is taken off of your income tax. That is taken off your income, that we don't hold you responsible for, so we'll tax you on the rest. So in basic terms, if you make $100, the government, like, say you have a product, say you sell t-shirts, printed t-shirts, or just t-shirts, plain t-shirts. The government says you made what you made. You made $100 off your shirts. What did it take for you to buy and sell them shirts? So your expenses, I had to go to the wholesale place and I paid $25 for the shirts. And then I had to pay $10 for shipping. I had to pay another $10 for labels to put on the shirts to say to brand these shirts as my shirts, so people know that's my shirt or whatever. They know where to get the shirts from. Whatever you you're paying for expenses, right? The government says, okay, you made $100. Will minus the expenses that you had to pay to get the shirts and provide the shirts, and we'll so the expenses say the expenses is $50. We only gonna charge you $50 worth of taxes. We only gonna charge you taxes on the $50 profit. You get what I'm saying? So you take the 100 that you made, 50 for expenses, you minus that, you actually profited 50. The government taxes the 50. It's the same thing with standardized deductions if you don't know. This, and they give you a deduction for your kids. They give you a deduction for just expenses in life. You get what I'm saying? And if you can prove to the government that now there's a standardized deduction, right, for these tax filings, like I said, filing single, filing married, and so on and so forth. Now there's a thing called itemized deductions. Is itemized expenses. Now you can now if you use your house as a business or you use your car for your business to make deliveries, you can itemize deduct things, certain things, certain expenses for your business, for your person. And like I said, I'm not a tax expert. Please go to your whoever you file taxes with. Please go read up on, if you do your own taxes, what these itemized deductions are. So, and just know, like I said, this is a basic conversation. Just know if you can itemize deduct more than the standard deduction, then you will end up with a lesser tax fee that you have to pay. In this life, I feel like this is a black people conversation I'm trying to have. Or this is a black people conversation, but this is anybody who just really don't understand of how somebody who's rich, who makes an exorbitant amount of money, even though they may pay a lot of taxes or may not pay a lot of taxes. If you hear about somebody like Amazon who doesn't pay a lot of taxes, somebody who like Donald Trump who doesn't pay a lot of taxes, you hear about certain people like, yo, how do they not get to pay taxes? Or how do these businesses not get to not pay a lot of taxes, but I as an individual are in a tax bracket where I pay hundreds of $1,000s in taxes, or high some, like I heard people say I pay somebody's salary in taxes like $70,000-$80,000 in taxes, and because I make a certain amount of money. Is the understanding that you are forgetting is you do not pay taxes on losses. This is what this video was for, mainly. For you to understand, you only pay taxes on profits. And I'm not talking about a non-profit situation. That's a whole different conversation. When you are for profit, you are a business. You only pay taxes on profits. If you do not make a profit, you do not pay taxes. The government actually pays you if you can prove that you are at a loss. This is why people with small amount of income and may have, say, like 3-4 kids that they can claim. So you have your standardized tax deduction upon having kids and paying for child care and all of these things. Now the government looks at it as, oh, it's an imbalance your way, like you paid too much in taxes that we actually owe you, even though your income You might not even pay that much in income taxes. I mean, because what I'm referring to is when they take taxes out of your check. We'll get to that part. But the government pays you when you are at a loss. When your standard deduction is so much, and then like I said, you got a deduction for your kids and your child care and maybe your business or whatever. If you then if your expenses are more than what you make than your income, then you actually get reimbursed. That's what is called a a return. I mean a refund. So that's where your refund comes from. The refund comes from the government saying, "Oh, you're actually in the hole. Let us help you out." So when you when you are for like I said for my black people, when you are getting in your own businesses and you are starting to make a profit, what you kind of want to do and what a lot of these people, a lot of these businesses, what they're doing is they get businesses where they're at a loss. It's when you can claim a loss, it takes a hit to what you make. It's like you don't make as much profit. If that's why the music industry, the movie industry, the marketing industry, the retail industry is what I want to say. That's why when you get into certain industries, it's not a bad thing to take a loss because you don't you get to keep all the income, but if your loss is greater, you just get to keep your income. You don't have to pay taxes. And what I and what you kind of what I want to get to you is for a lot of people who's in the food industry, like I'm talking about as workers, or in the retail industry, you will understand you may have a loss prevention at your job. You may work at a food restaurant where somebody doesn't like their food goes bad, somebody steals. If you're working in retail, people bring back return items. People people bring back damaged items. Like Walmart, they like you could bring pretty much anything back to Walmart. You could bring pretty much anything back to Target. Like open items, like a lot of things you could bring back because what it is, or you can steal out of certain places. I mean, they don't want you to steal, but they account for these things. Loss prevention counts for these things, and why these businesses account for them is because they can charge it as losses. So even though a Walmart may make millions, $2 million a month, or even more than that, when people bring back items and they gotta ship them back, and all of these things, or food expires in Walmart, or certain things get damaged, or people like I said, people bring them back damaged, or people just bring back items that you can't restock or like reshelve, and all of these things, and they're paying employees, they're paying for employees health insurance, they're paying for employees when they get hurt, and they paying all of these things. They can claim that they took a loss as and when, like I said, when you take a loss, you don't pay taxes on that. So businesses are allowed, the more money you make, the bigger the business, you are allowed a certain amount of loss you can take. And these people, when you like people, when you start getting into taxes, you when you start getting into taxes and doing your own taxes and actually reading these codes and reading and getting a real understanding for everything they account you for, it's like they give you a thing that they don't count you for. They say, okay, you could profit on this, but if you take a loss this way, then we'll show up for you. Like, I worked at Papa John's delivering pizzas. It was a time where, I mean, I still do my own taxes today, but when I did it back then, at that time, I used my own car to deliver pizzas. So the government at that time, it was, they say you should be paid 50 cents per mile, right? Papa John's only pays me 35 cents per mile, right? If the government say I pay 50 cents, when I file my taxes, the difference, Papa John's paid me 35, the government said I should be paid 50, that 15 cent a mile, the government will pay me. So the government taxes are set up in a way where it sounds crazy, but the government doesn't want its people to take a loss. They want you to kind of break even for the most part. If you know how to do your taxes, they they'll pay you if you take a loss, but they want you to pay them if you profit. But it's a way for you to break even. You get what I'm saying? So for every, like I said, there's a flip side to everything in when you looking at taxes and government. You know what I'm saying? So when when us as black people, we come from impoverished neighborhoods and we just want, and we're so worried about making all the money. Oh, how do I make money? How do I make money? How do I make money? We have 2 jobs, 3 jobs. We get a business. We start cutting grass. We start doing all these things, and we start just accumulating all of this income, but we don't accumulate enough expenses. We start getting taxed more. We reach a higher tax bracket, but we also get taxed more. So now we feel like, what am I doing this for? And when and and when we looking at, yo, why does Amazon get to not pay taxes? Why does Donald Trump not to get to pay all these taxes? And it feels like, yo, I'm paying $100,000 in taxes. It's because you're only worried about making money. We have to start understanding that taking a loss, especially in businesses, taking a loss in business is not a bad thing. Having expenses is not a bad thing. It may take away from your, until you grasp the balance of, okay, my company can make this much even though I'm spending this much. Till you find that balance, you until you find that balance, you you get into this. How do I make and yo, how do, it takes some learning, you know. It takes some learning, and like I said, you got to talk to the right people, far as making yourself not accountable, far as getting the S corp and all of that type stuff, and learning. Okay, I can pay. Like, I seen a video online the other day where this couple, and I'm pretty sure many couples do this. Like, they pay their kids as a job, uh, 13,000 dollars a year type thing. Pretty much like $1,000 a month and whatever. and that helps them with their tax liability because they can use that as a deductible. Like, all right, we use our children, we employ our children, so we give them a salary, and now that takes away from our tax liability. And like I said, there's a lot of rules and regulations that once you start getting into this, you could pay this person and pay that person. When and I bring that up to say, people, when you hear certain amount of this certain person is giving this away and to charity or whatever, please stop thinking that everything is dollar for dollar. This is not a dollar for dollar country. The government, like I said, they want you to break even, but they don't. They want you to come close. They still want to get paid, but they don't want you to take a loss. Is what I'm trying to say. They want to get paid, but they don't want you to be at a great loss. They want to have a thriving company. So, say you give $1,000 to charity. The government says at your tax bracket, you're allowed to give $600, up to $600. So even though you gave $1,000, we'll give you back the four type thing. I don't know if I'm saying it right to convey it, but it's for every tax bracket you are allowed to give away a certain amount of money, but it's not like you're getting back all that money. Will for the $1,000, if you give away 1,000 for your tax bracket, we're giving you back 600. So, but you can't go over 1,000. If you go over 1,000 from you for your tax bracket purposes, we're only reimbursing you 600. See what I'm saying? So if you give away 1,500, you're not in a tax bracket to where you'll get 1,000 back. It's still gonna be 600. See what I'm saying? So whatever, like when you start reading up the tax laws, whatever your range is, most people will just hit that range. So if the government said I'm in that tax bracket to give away 1,000, and then I'll get the full 600. Let me just give 1,000, because anything less than 1,000, then I'll probably get only 400 or 300 or 200. So let me just give the 1,000 and just get the full six. You get what I'm saying? It's a give and take. And so if you do your research, a lot of these they say a lot of these Fortune 500 companies give away grants and money, not to anybody, but you have to have some type of proposal that you could give to them so they can give you a grant. Like everything, understand this is the government, is jail time involved, and tax evasion, and being sued for, and all of that is involved. So everything kind of has to be legit. So to get money from a big company, you have to give a proposal. You have to legitimize everything you're doing. But there is money out there to get if you're coming legit. There is money out there to get if you're coming legit. Right? I might make that a saying. That might be the title. There's money out there to get if you're coming legit. So, like I said, when you really get into this taxes game, I want y'all to understand that it's not dollar for dollar. You are getting taxed on your profits. So the more profit you have, the more tax liability you have. So please start getting into, when you are coming up with businesses, I don't want you to take a loss per se, but if anything, this is the best advice I can give you as a non advice giving tech person, right? This is like I said, the best not even let me rephrase that. This is the best perspective I can give you, not advice. This is the best perspective I can give you. If you have your own business, not you being a business, because again, you are a business and you are paying taxes on your profit. If you have a business, use your business as how you get money. Far as your business make money and then you pay yourself a salary. But allow most of the money to go back into the business. Make Because when you have a business and the the only way your business makes money is if you count it as a profit. You have a business, if you put the money you make back into the business, is not a profit. Does that make sense? The money you make, if you reinvest it back into the business, you do not have to count it as a profit. But once you take the money out from the business and you start putting it into your bank account and start spending it on yourself, then it becomes a profit. But if you put it back into the business to grow the business and you add it to your business's expenses and all of that to grow the business, then the government doesn't see it as a profit. You see what I'm saying? But if you take out money to pay yourself from your business, which your business could be making $100,000, but you only pay yourself $20,000, like somewhere you can live off of or whatever, then that means your tax liability won't be high. You know what I'm saying? But like I said, you do your research on that and so you can live the life you want to live. But people, please understand that the way these companies, these big businesses and these millionaire people are getting it are is because they're lowering their tax liability by having more expenses. That's kind of what I wanted to get to you. If you are not if you are one-sided, only hiring your income, but you're not hiring your expenses to a point where you could be like, yo, I'm actually taking a loss. If everything is profit, then you're paying you're just hiring your tax liability. I hope you really get an understanding of where I'm trying to go with this. Cause like I said, I'm not a tax expert. I'm not here to really specifically break down things what you can do and what you should do. This is just a general understanding because I just believe us as black people, us as coming from impoverished, us is coming from not really making no money, and we start making money, all our concern is making, and not understand the way you really make money is by giving some of this money away. Is by having expenses. But again, I just wanted to share this point of view with you. I hope you enjoy yourself and your taxes, and I hope for you to make all that you can make. Thank you.